Can you imagine that maybe if we're in the beginning of a massive new bull market in gold, how profitable businesses like Laiva Gold and Tucano Gold could possibly be? Going back to our Laiva hat here, this is what we're all about. Big dividends for Laiva Gold. Big dividends. The minute you sign a transaction, if you feel like you've got a really big stomach ache and you're about to race to the toilet, then you know it's going to be an absolutely amazing transaction. It will be a life-changing experience for your shareholders, and show them that we can create 10, 20x return for our investors. That's what we're all about.
All right, today we're having a discussion with Jeremy Gray about contrarian/value investing. We're going to be talking about the project he's currently working on. We're going to be talking about fundamentals behind the recent insane price move we've seen in gold and other precious metals. And hopefully we'll also discuss a quick outlook for gold heading in 2024. Now, quickly, why should you care about the opinions of Jeremy Gray? I think that's an important question to ask, and I think his CV answered that question quite well. Jeremy Gray is a person that has decades of experience in the mining sector. For example, as the previous head of the Metals and Mining Equity Research Department of Morgan Stanley, just to name one example. And of course, Jeremy is now the CEO of 3 different mining companies, first Pilar Gold, then Laiva Gold from Finland and Tucano Gold from Brazil. So Lars and I think he knows 1 or 2 things about gold and precious metals. Jeremy, thank you for the talk and thank you for your time today.
Stein, what a great pleasure, mate. Really appreciate the opportunity to talk with you and Lars, and fantastic. Yeah.
Awesome. So Jeremy, to kick off the conversation, I would love to talk about contrarian investing, which is something that Lars and I believe you've done in the past with your 3 gold mines that you're currently in the startup phase of. Can you perhaps dive into what first principles you believe are behind investing for you? What are like the kind of things you look for a great investment opportunity?
Yeah, Stein, we specialize in buying big secondhand gold mines and then try and find the funding to reopen them and take advantage of higher prices. And usually the first principle of doing that is you have to buy it when the market's terrible. And that is incredibly difficult because it's hard to find the money to make the acquisition because no one's interested. And I think that's one of the hardest things about contrarian investing is it's just very hard to find money when a market's out of favor. And the other principle that's we all find, I think, is that often we're very early. I mean, we started the journey in Brazil 5 years ago. We bought Equinox's mine, PGDM. We bought the old Orinoco mine, the super high grade Satao mine. And that was 5 years and three years respectively, right in the depths of just an awful market. We bought the Laiva mine in Finland in November of 22. Again, market was shocking. Absolutely terrible. 1620 gold. At the time, everyone thought we were mad. And then, of course, we bought the beautiful Mina Tucano mine in October of 23, the old Great Panther Beadle Resources mine. Again, hardest money I've ever had to find was that transaction. It was really hard to find the money. Even though now it looks fantastic, at the time, very difficult.
And I guess what's even harder about that is that even though gold bottomed in 2015 and has been in a bull market ever since, basically, mining companies might still be in a bear market for years after. So timing that bottom correctly and the correct opportunity for mining companies almost is separate from what the gold price is doing.
Yeah, and I think, it's easy. Okay, it's easy to say that the market did bottom in December of 15 at 1,050. On paper, that does look like a bull market from there. But believe me, since that period, what is that, nearly 9 years ago, we've only probably had 2 good little bounces of about 2 or 3 months each. And then we went for these awfully long sideways movements or just downward drafts. So to me, since 2015, it's definitely been a bear market. And that changed only 4 weeks ago. Like it's only literally changed in the last 4 weeks, in the last 9 years for us.
Yeah, and I guess also when you're operating these mining companies, another large factor of your input is cost, right? Because you have top line, the gold price matters the most, but for bottom line, cost is a large input just as much. And there, with inflation being quite substantial since 2015, I don't know the exact figure, it's probably a 50% loss of purchasing power. That also means that you need a gold price that's almost twice as high just to break even as a mining company.
Yeah, you do, particularly if you're an American producer, like if you're based in the US, but you're very fortunate in Brazil and also here in Europe that both currencies have devalued dramatically in the last couple of years. The key is to buy big mines in currencies that are weak or about to get weaker. And that helps to cushion the impact of the rising costs. So, yeah, but you're absolutely right. It's not a cheap business to run. you have to be focused on production, daily ounces. It's all about how much you produce on a daily basis, not on how much you produce on a yearly basis, because it's all about ounces coming out every day.
And you say you have to look for those weaker currencies, countries that have weakened currencies, because then the gold price rises significantly more in that local currency compared to the US or Canadian dollar. Is that correct?
Well, particularly the US, Stein. So I'll give you an example. Like, this is why I'm so bullish gold, because you have this weird phenomena right now. We have a very strong US dollar gold price, but a weak currency in Brazil, in Canada, in Australia, in euros. Most countries where you have gold mines are actually also very weak currencies. Now, that compares to the last time we had a really big bull market in 2010-11, where many of those currencies were super strong. So you didn't get the benefit of the margin expansion that you're now starting to see. And I think that's why Newmont had beautiful numbers the other day, and why a lot of producers are suddenly getting phenomenally high margins in the business, and the stock market's completely ignoring this. It's quite amazing.
So what I also find interesting to quickly talk about is, how do you determine what is a good opportunity and what's not? What are the inputs that matter the most for you when you actually find that gold mine that you said secondhand gold mine that went bankrupt preferably, or is discounted for another reason? How do you determine which ones are a good investment and which one are a lousy investment?
Well, I think let's go back to the most recent transaction. Mina Tucano, we acquired out of bankruptcy in Brazil. It was the old Great Panther. It came with everything, Stein and Lars. It has a 3.5 million ton state-of-the-art mill, has a beautiful 200-man camp, a world-class laboratory. It even has an airport, and we think 6 million ounces of gold. So it has, to us, the look and feel of a business that will be around for the next 30 or 40 years. And I actually think personally that is the best transaction or acquisition in the gold mining industry in the last decade. No one's given us credit yet, and that's fine. But we bought that effectively for less than $5 million US, and the price of replacing that today, to build that today, is at least 500 million. So 1 cent in the dollar, and even if you had the 500 million, it will take you, 5-10 years to get the permitting, to get the funding, and to even build it today. So that to us is a criteria of a good investment, a big business, long mine life, and you can turn on straight away, which is what we're doing right now. We're turning Mina Tucano on right now. We're in the middle of fundraising right now, and we hope to have our first gold pour at the end in about 6 weeks, in late June, 6-7 weeks.
Basically, what you're hinting at is that discount towards replacement cost, right? That's a figure that you said, $500 million replacement cost versus the $5 million, effectively what you paid for Tucano. But that, of course, doesn't capture the value that it gives to investors today. So do you do a discounted cash flow analysis before these acquisitions?
Yeah, we do. And the numbers for Mina Tucano, for Tucano Gold, and we've done the same for Laiva, are staggering. I mean, we can get a valuation. If you assume 2,200 gold for the next 3 years, which is very conservative. The price today is 2,300. So we put in 2,200 every year for the next 3 years, and then assume the price goes back to 1,800. We get a valuation of 1.2 billion based on future production. And that's a number very defendable. And why we think the other great thing about this business is we have an extremely tight share structure. So we only have 52 million fully diluted shares out. So that gives you a massive scope for huge re-rating of the share price as well. So I'm jumping ahead of things, Stein, but absolutely, it's all about MPV, discounted cash flow, and the ability to turn on a business really quickly and capture that. I'll give you a great example. A great example is every day we do a call with our team at Tucano Gold in Brazil, in northern Brazil. You've been to Amapá, you've been up there, both you and Lars. We went through the whole list of items we need for the mill. There's about 60 different parts we need, very small parts. Total cost of those parts is $1 million US. Versus, if we were to build that mill today, would be at least 400 US, for example. So again, same situation. You can basically turn these things on very quickly. You just make sure you've got the parts ready so you have some backup, and you're cash flowing straight away. So it's all about cash flowing fast doing it, taking advantage of record prices.
And I guess something to extrapolate for the viewers at home from this is that you should look for these mining companies that have relatively low capex, that can get into production relatively quickly. That Goldilocks zone of going into production quickly but having that enormous re-rating event of valuation, that enormous discount to NPV is what you described, right?
Yeah, and Stein, to be fair, there aren't many of them, because no one has been buying up these mines like we have. We're really the only one in the industry that have adopted this strategy, because a lot of people ran away from the business for the last 5 years. They ran into lithium or artificial intelligence or trading Apple shares all day. So there aren't many of us that have done this. And anyone who has a business like we have, if they're not re-rating, I'll tell you why they're not re-rating. It's because they have too much debt. They have too much debt, or because they put a really nasty hedge on the business that is now meaning they're selling their gold at a huge discount.
Jeremy, sorry to jump in. Could you quickly explain hedge for the viewers at home? What does a hedge mean for a business like a gold producer?
So a big bank will say, hey, I'm Jeremy, I'll give you 100 million to go and build a mine. And you go, oh, brilliant, fantastic. But one condition. Every ounce or every 2 ounces that you produce, one of those needs to be hedged at today's price. And you go, oh, that's fine, that's okay. Today's price is $1,600 if you did the deal, 2 years ago, and all of a sudden you're delivering now at a price where you're only getting half the current spot price and the other half at a much greater discount. And there's a company I know in Western Australia that's had awful troubles with that. They're selling half of their gold right now. I won't mention who they are. A good friend of mine, he borrowed some money off Macquarie, and he's delivering half of his ounces at 2,300 Aussie right now. And the spot price, I believe, I haven't got it in front of me for Australian dollar prices, I think 3,600. So you're leaving, what's that? You're leaving $1,400 an ounce on the table for someone else. And that's why we, as a group, Tucano Gold, Laiva Gold, we never hedge. Never ever hedge, because it's extremely dangerous, and you can lose $50-100 million on such a transaction of lost revenue.
Gold miners you described in Australia, they've fixed their price for the next couple of years to decrease risk, but thanks to that they've also decreased their upside with a rising gold price environment. Makes complete sense, and that's also why I believe a gold mine, especially in an inflationary period like we're currently in, shouldn't be hedged. I completely agree with you on that perspective. And what I also find really interesting is that you described that everyone else was basically running for the exit, and that was when you were looking for these gold mines that were going bankrupt around the world, that offered these great value propositions if you're willing to look, if you were willing to do the hard work. And I think that's definitely something that we can take into account as investors at home, to go against the grain, to be willing to make a bet that others aren't making currently, because that's where you find these great opportunities like Tucano. We'll talk about it in just a second, but these enormous discounts to intrinsic value, because everyone is running away in fear.
Well, look, let me put my Laiva hat on for a minute, because we're going to talk about Finland just for 1 minute. And when we bought Laiva, which is in central Finland, it was November of 22. The price was 16.20, like I said. You would not believe the criticism we took when we acquired that business from people in the industry. They're like, you must be crazy. This mine's failed before. Don't you know about this? And don't you know about that? And don't you know the gold price is going to 1,200? And, it wasn't easy, because, when you buy these mines, you then you have to have them on care and maintenance for a while, because it takes time to raise the money. So you still have to pay for everything. You still have to keep everyone employed. So it's a really tough gig to do it. And I would say also that publicly traded stocks generally don't do it, because it takes too long to get approvals from the exchanges, and it's too legalistically expensive and time consuming. So the minute you sign a transaction, if you feel like you've got a really big stomach ache and you're about to race to the toilet, then you know it's going to be an absolutely amazing transaction. It will be a life-changing experience for your shareholders. If it feels too good and too happy and everyone's high-fiving, probably not a good one. It's probably going to be a fizzer. And that's the way we generally feel. We tend to go against the grain, and we even now, going back to Tucano Gold, we copped huge criticism when we bought that in November. Was it October last year? Huge criticism. And I think it's the most amazing business we've bought so far. Amazing. Just incredible. So we just want to prove the critics wrong. We want to return the loyalty from our shareholders and show them that we can create 10, 20x return for our investors. That's what we're all about. 10, 20x returns.
10, 20x returns, love it. And this is really Warren Buffett type of investing. Basically, you don't need this enormous IQ to beat other people. You need a stomach to be able to handle yourself through that bear market. I quickly want to give you an opportunity to plug your businesses and how people can reach out, because of course there's currently a round open for both Tucano and Laiva. They are private. Perhaps you can explain what it means and how people at home could potentially participate in these gold mine restart stories.
Thank you, Stein. Look, we are both Tucano Gold and Laiva Gold will be listed on the TSXV, I think, in about 4 to 6 months' time. So we're intending to list them, but at the moment they are private. We have rounds going on right now for both companies, and ironically, both are at 80 cents. It wasn't meant to be that way, but they're 80 cents, and they value the business for both of them at only about between 40 and 45 million Canadian for both Tucano and Laiva. Again, it wasn't planned that way. That's how the share structures have evolved. So if you're interested, would love you to. We have 616 investors now who have backed us. Sophisticated mum and dads who over the last 5 years have said, hey, I really like what you're doing. I love the fact that, as a CEO, you're calling us, you're keeping us informed. We do weekly or fortnightly newsletters to all of our shareholders. And basically, you can go on to tucanogold.com or laivagold.com, and Edward.Balme's there, and he would you just email Ed and say, hey, I saw the interview with Stein and Jeremy and Lars. Love to learn more, and I promise you, I will call you. I will call every investor that's ever backed us, and I'd love to hear their story. In fact, I've just 2 new investors from Holland came last week. Really great guys. Talked a lot about them. They also have the same views about, I think, a lot of the listeners to your wonderful channel. They're worried about inflation. They're worried about money printing, about currency devaluation. They want hard assets. They want real things, not pie in the sky Bitcoin and all this fuzzy stuff. They want real hard things. And these are big businesses that'll be around for the next 30, 40 years. So yeah, tucanogold.com, laivagold.com, and I promise you I'll call you and say good day.
All right, and a quick disclaimer, Lars and I are both shareholders of both Laiva and Tucano, so we are biased here. And perhaps you can quickly also explain what kind of the barrier of entry is, because for retail investors, they might not be familiar with investing in private companies. How much should they be thinking about before this opportunity would open up to them?
Stein, our smallest investor is Jim from Northern Mackay in Queensland. Just so happens he's from Australia. We have investors from all around the world. He put in 2,000 Canadian dollars. And he calls me every second week, and we have an update, and I love to hear his voice. Our biggest investor is David and Michael, who put in over 9 million. So anything from 2,000 Canadian upwards is very happy to, bring anyone on board. And just because there's a little bit of paperwork, we have to issue the stock, we have to go through a process, and we want you to generate a significant return. We're all about generating big gains for shareholders, doing it properly, doing it slowly. It won't happen straight away. It's not an overnight instant sort of success. This will probably take 1 to 2 years to really show how good what we're doing. But we've built this business because of this amazing support from wonderful, sophisticated mum and dad shareholders, 616. And we've taken no debt. We have no sugar daddies, so we don't have some rich guy like Eric Sprott ringing me saying, hey, here's 20 million. He's never called me. I have no institutional shareholders apart from BlackRock because they swapped out their debt for shares. I've never met an institution in my life. I talk to the real people out there who really believe in what we're doing, and that's the way we've grown the business, slowly, steadily, with no debt, because debt is a killer, and no hedging, as we said.
Great to hear that, Jeremy. And could you maybe tell us where Laiva and Tucano are at this stage? Because I believe especially Tucano is really hot and happening now with his first semi trucks arriving on site just last week. Could you maybe tell us a bit about that?
Yeah, definitely, Lars. Super excited. I mean, Tucano Gold is right in the middle of a commissioning right now. So we're going for it, and the timing seems to be perfect. And we bought a first order of 8 Sani trucks, 60 tonners, 2 excavators, 75 tonners, and a loader. Pretty much all of that's now arrived, and the Sani group, Pedro and João out of Belo, have been amazing. It sounds easy just to deliver a truck, but to go from Belo to the northern tip of Brazil is a 20-day journey, and it also includes a 2-day crossing, would you believe, of the Amazon on a ferry. So that we're doing training this week for our operators, safety training. Those will be working early next week, probably even later this week, by the 1st of May. And the beauty of Tucano, I mean, there's many great things about Tucano, but there's 1 million tons of low-grade stockpile that's sitting right next to the mill. The mill eats 10,000 tons a day. So you can imagine there's 100 days of feed. There's 3 months of feed, I think, if that's right. 100 days times 10,000 tons. Just there, super low cost. And we've been, our geology team, led by Luis, and he's got a team of about 16 in his team, have been testing over 1,500 samples on the low-grade stockpile. And so far, the results have come in at nearly 1 gram a ton, which is amazing. We had 0.5. 1 gram a ton, to give you an idea, 1 gram a ton's worth, I think, on today's prices, $65 for 1 gram. And so you can imagine, it's sitting right next to the mill. We put it straight into the mill, and we can produce a very low-cost production. But that stockpile is not what we're here for. What we're here for Tucano is we have 8 open pits. AB1's ready to turn on with that, and we'll be ordering more Sani fleet. And also we have the most exciting underground project in the world called Uracom Complex, which is, we think, 6 million ounces. So you've got 8 open pits that run 7 kilometres down to the mill. And under every open pit, we think there is enormous long life underground mine as well. And Great Panther did 3 years of drilling right at the top where you went to. You remember Uracom North, right at the top there? And they drilled out 1 million ounces just from that one pit. So we think we've got at least 6 to 7 million ounces there. And then, but I'll talk more about Tucano. But we are, going back to your question, we're right in the middle of commissioning. We're focused on first gold pour by the end of June. And I'm hoping that we'll get a really good price when Asahi picks it up in the helicopter. And it couldn't be a better time to turn it on.
I definitely agree with you there, Jeremy. And what about Laiva? Because I believe you're also intending for first gold there during 2024.
Yeah, we were going to turn Laiva on actually last summer, but I just couldn't raise enough money. And we debated about it. Should we turn it on? It was in September, and I said, nah. And we pulled out at the last minute, and I'm kind of happy we did, because in Finland we had an extremely cold winter. We didn't have enough money to turn it on. So right now we're in, spring's well and truly underway. Summer's about to turn on. It gets dark now at nearly 11 o'clock at night. So we want to focus on getting that turned on this summer. And we haven't yet got all the money raised, but the conversations we're having are certainly extremely positive. And we're very focused on turning that on, hopefully in 4 to 6 weeks, once the money does get completed and the funding is complete. So, Lars, Laiva Gold is the biggest gold mill in Europe. Like, I just sometimes, you've been there, you've seen it, how big it is, right? It's massive. And I took my son up there the other day, and a full disclosure, we did receive a takeover bid for Laiva from a very large competitor. They appointed a big bank. And I was there like 3 weeks ago with my son, sitting with Jim Jackson, our general manager. Beautiful sunny day. The sun was just beaming down. The snow was melting. And I said to Jim, I can't sell it. This business is too good to sell to a local competitor. It's too good. It's a business that's worth $1 billion. And, the current round of valuation is only 40 million Canadian. It's a business that'll be around for 30, 40 years. Biggest gold mill in Europe. And probably got 5 million ounces if you bother to do some more drilling there. So we sat there. I was with my son. I was with Jim. We're on the ROM pad. I rang the banker and said, sorry, it's not for sale. Can't do it. Not selling it. I'm not selling it. It's not fair for our shareholders. We don't think we can maximize the value by doing that. So, we're not about flipping assets and just taking a quick turn. It's very easy to do that, right? It's very tempting to say, I'll take a quick turn, make a few bucks. we're all about the long term. We're all about where this business will be in 5, 10 years and how big it can grow. And also with Laiva, the most important thing for us with Laiva is to pay a big dividend. We're all about paying big dividends. And there's no reason it can't, because we bought it out of bankruptcy, so it comes with no debt. There's no creditors to pay. So it's a clean balance sheet. And everything we make, we want to basically, well, at least a big chunk, give to shareholders back. That's what, going back to our Laiva hat here, this is what we're all about. Big dividends for Laiva Gold. Big dividends.
And I really like that long-term view that you have on these assets. Like you said, getting a quick flip is very easy. Also on the stock market, it's very easy to get a quick flip. But the true returns are made by holding an asset for a bit longer period. Oftentimes, you also have to do a bit of work in between, like you're currently doing with the team. Like you said, the drilling needs to be done at Laiva to get that, to unlock that value that is in the ground. But that long-term view is crucial if you want to get those higher returns.
100%, Stein. And can you imagine that maybe if we're in the beginning of a massive new bull market in gold, how profitable businesses like Laiva Gold and Tucano Gold could possibly be? Like, I get goosebumps thinking about where this market could go. Like, I think you haven't seen anything yet on the gold space. The gold space could go absolutely crazy in the next 6 to 12 months, and no one's in the trade. That's what I love about that. No one's in the gold trade in the West.
Jeremy, I love the transition into gold. Let's talk about gold as the fundamentals behind it. Of course, we have seen quite a steep move in the gold price in recent times. Perhaps we can talk about some of the fundamentals behind that. And as well, why are gold companies not really following?
I think as a producer, we're all scratching our head going, what's the market not believe? Like, is there something they know that we don't know? I mean, do they think the gold price is about to get smashed down back to $1,900 an ounce? I tell you the big difference now. The big difference now is you have a new consumer there called China, and the Chinese mums, dads, young adults, they want exposure to gold, and they're buying it with an insatiable appetite. It's like one of those Chinese smorgasbords where they just keep coming back with more and more plates, always choosing the lobster and the prawns. They are all about buying a lot of gold. The market has dramatically changed in the last four months. So yeah, I think the gold market is changed forever, and it's because it reminds me. I'll tell you what it reminds me a lot about. It reminds me a lot of the iron ore industry in 2003, and everyone said that's really strange. Why is the shipping market suddenly going crazy? And it's like we were all scratching our head because up until 2003, we always thought that the iron ore industry's price was set by the Japanese. And I remember, 30 years ago as a young analyst at Credit Suisse, we would spend hours debating whether the Japanese would settle with BHP and Rio Tinto at $21 or $21.50 a ton. China suddenly came along and changed that market forever. And that is what's basically happening with gold today. Up until recently, the Indian market was the biggest consumer of gold. But I think, give it time, China will be 2 to 3 times bigger than India. And that does completely change the whole dynamic of the industry because they're consuming, staggering numbers of physical gold, staggering numbers every week. And our industry has not been built to fill that demand. So what you're seeing now is all the metals moving to the east. All the exchanges have been drained of metal, and it's really exciting. Like, it's really exciting where this market could go. And of course, no one wants the powers that be. A lot of central banks don't want it to run away, right? They're still buying, but I think you're going to see a dramatic move soon. And I'm not a buyer in like the market will pull back.
All right. Jeremy, I'm very happy you started sharing regarding this new buyer in China, because I'm going to throw a bit of shade to some other YouTubers out there. They've been hinting at central bank buying. That's the big driver behind the recent gold price. But I just fundamentally cannot agree with that, because here we have supply and demand statistics for gold, yearly chart, and we see this pink blob here in 2022, 2023, the bottom stack, that is central bank buying. And central bank buying in 2023 and 2024 has been lower than 2022. So in my opinion, that cannot possibly be the reason behind this recent move. And Jeremy, you brought this chart along from Chinese gold trading activity, and that's the chart you were hinting at just a couple of seconds ago. And I believe this has to be the reason behind it. This trading volume on the Shanghai exchange has just increased significantly. It has 4x, and it seems to perfectly align with the rising gold price. So I believe you are on a winner here. It lines up perfectly.
Isn't that chart amazing? That chart is staggering. And what happens if it keeps going up and stays there? And it's absolutely. I didn't know central bank buying was not that big. That first chart you showed there, Stein, is very interesting because everyone says, "Oh, central bank buying. It's all because central banks." Not really. It's down to the mum and dad consumer. You remember Chinese, once they get into something, they don't stop. It's not like, oh, they get bored with it. Look at the way Louis Vuitton, Hermes, all the Swiss luxury goods. The Chinese weren't even in that market, 10, 12 years ago, 15 years ago? They're tiny part of the end demand. And then suddenly Louis Vuitton, Hermes, all the big brands just completely shifted to China and forgot about their other customers. And that's what you're seeing in gold. It's the Louis Vuitton effect. It's the Hermes effect. It's people are bored with handbags. They're bored with buying another apartment that never seems to go up in price. They want real stuff. They want to buy an ounce of gold, 2 ounces of gold. They don't want another Hermes handbag or another Louis Vuitton or a Chanel. They want real stuff. And this is changing the market dramatically. I'm so excited, Stein.
I couldn't agree more with you, and I just want to quickly correct something. Central bank buying does matter. It is quite substantial, as you can see. It is a large part of the market, but it isn't, I think, the main driver behind that move. I think you are spot on. You hit the nail on the head with your China analysis. I think that's exactly right. Perhaps we can quickly talk about what should we expect for the rest of 2024. And as we're talking long-term investments, what should we expect from the gold price heading into the future, into 2030? What is your prediction, Jeremy?
I think it's going to be sooner than many expect, Stein. A lot of people go, oh, it'll go to 3,000 in 2 years' time. I think it'll go to 3,000 this year, easily, and possibly higher. And it will happen much sooner than people expect. The consensus right now is gold's going to have a pullback. And you said it yourself, the gold miners are not reflecting this amazing move. They're not re-rating. They're not sort of suddenly jumping up like they usually do. And I think, again, going back to being counter-cyclical, doing against the grain, this is exactly the trade investors should be looking at, is to go long the gold miners, take advantage of what a price will, I think, go much, much higher. And so near term 3,000, next year possibly 6,000. That's my view.
And what are the fundamental drivers behind that? Do you think that's mostly based on that sentiment with China? Is that the de-dollarization of the world? Is that inflation? What is the main driver behind that prediction, or is it all of them together?
Probably all of them together, but I think the demand side is just dramatic. You've got a market in China that has suddenly woken up that could basically buy the entire global mine supply in 1 year. And that is a staggering number. And it's not that hard for them to do that. And of course they go, yeah, but then they can source other metal because everyone stockpiles gold. Well, there's not a lot left. There's not a lot left in the exchanges. So I think the market has changed forever. I think none of us really appreciate just how big this change is. And also, if you look at the gold market in the last 10 years, it was really controlled by Western bullion banks who would often issue paper shorts to get the price down. And I would warn anyone, do not buy an ETF, because the ounce that you think that you own as a piece of paper, I heard a statistic. I think I heard it on your show, Stein. There's about 157 other people who believe they also own that same ounce. So it's not real to me. It's not real. These ETFs are not real. The other thing that's interesting is the American ETFs have actually been falling. So usually when the price goes up, the ETFs also follow suit. So I don't know if that's because they're now wanting to buy physical, or maybe they're too busy chasing NVIDIA. Let's look at NVIDIA. I mean, everyone talks NVIDIA, but the stock's been awful the last 6 weeks. Awful. So you've seen a dramatic switch, exactly like I think you saw in 2000, 2001, when people switched out of Nokia in Finland and started buying, a Finnish elevator company or a Finnish mining company. That trend of going from sort of tech into hard assets has just started. It's just started.
Yeah, I think that's a very interesting take. And this is, by the way, the chart that you hinted at with gold ETF outflows in recent times. Like you said, we saw this insane move in gold while people were selling in the Western world. So that's definitely supported by data. Thank you for that, Jeremy. And what I think is also interesting to note is that most people in the Western world don't currently hold gold as part of their portfolio. There are a couple of crazy people that actually do. Crazy between paraphrases. But once that changes, once people start holding gold again, it could actually be an afterburner effect. And also what I think is important to note is that gold has actually gone up almost 10x since the 1999. So that move that you're predicting at 2 or 3x from the current price point, that isn't actually too crazy if you place it into the historic perspective of gold.
Absolutely, Stein. I mean, the move you could see, the parabolic moves you will see in gold will shock everyone. I really believe that. And it's the disappointing thing for me now is the market has moved. So I know I can't do any more acquisitions because the market's going to get too hot. But hey, we're very happy. We've got 3 amazing companies: Pilar Gold, Laiva Gold, Tucano Gold, and other things will come along, maybe mergers with other groups or something like that. But we will see some really special changes in our industry that for the likes we've never seen before, and much bigger than that 2003 to 2011 move. Much bigger. The next leg is going to be something truly special and change the whole industry forever.
It's quite interesting that you say that you can't currently do more acquisitions because we haven't really seen public gold equities move up with the gold price as much. Is that a different story in the private space where you're mostly fishing in?
Yeah, there's definitely a sudden dramatic impact of people wanting to call us, wanting to, hey, can we team up and list with you? Can we use our shell? We're very happy to take those calls. A lot of Canadian and Australian promoters are realizing they don't have any gold story that they know out there. So we're getting a lot of incoming calls, a lot of dramatic improvement in interest from our wonderful 616 shareholder base. We're just signed up Moneta Securities out of Canada to be our lead broker for both for Tucano right now and hopefully for Laiva Gold. So the last 4 weeks have been more busy than the last 4 years. Like I'm being totally serious. It has just been pandemonium, and yet it's only starting, right? It's only starting.
And you're saying that the chances of buying a new gold project are getting slimmer by the day at current gold prices, but actually you're moving into iron ore with Tucano as using a byproduct, right? Or
yes, yeah, we are. I'll go back to my Tucano hat. Tucano has a beautiful iron ore business inside of the gold business, and I didn't even know we had it. And then when we've completed the transaction, we were doing another final site visit, and I said, "Oh, what is that thing over there?" Oh, that's a magnet mill. Because Tucano Gold is basically a very large gold system situated around a very large iron ore system in northern Brazil, in the beautiful, beautiful state of Amapá. When we produce the tailings, which is the waste that comes out of the gold mill, it's very rich in iron, sometimes as high as 45%. And yet at the moment, it just goes straight into the tailings dam. Now, Beadle Resources, to their absolute credit, built a beautiful magnet mill in 2013. You saw it, Stein, Lars. Only ran it for 1 year because the iron ore market collapsed back then. And we are hoping to restart it probably in like 3 to 4 months once we've got gold going and producing gold. But we think we can expand it to 1 million tons. And that doesn't sound much in iron ore because everyone does 10 or 20 or 30 million tons of iron ore. The interesting thing about this is that we can produce this beautiful, green, very clean, extremely low-cost iron ore for only $5 a ton. Now, guys in China who make the same magnetite ore, same grade, 67 to 69, their cash cost is 100. In Australia, there's a Savage River in Tasmania, where I grew up, in Tasmania. Their cash cost is 80. So we think we're going to be the lowest cost iron ore producer in the world. Very excited about it, but we're at the moment right in the middle of gold commissioning. And but yeah, it's going to be quite something. And that all comes with Tucano Gold. Like it comes for free. You come as a shareholder of Tucano Gold, you get an iron ore business as well. So really amazing potential, huge long life opportunity for the iron ore as well, because there's just millions of tons of iron ore there.
Makes complete sense, and the shareholders were quite excited about that. I guess the last question before from my side before we end this recording off. Are there other opportunities in this acquisition space, in the private space, in other commodities that you would be willing to look at, or is it mostly precious metals for you?
It's a good question, Stein. I mean, for the last 10 years, we've just been in gold. It's an area I love. What I love about gold is that generally the day the helicopter picks up your gold, you get paid within 2 hours of the shipment. Whereas a lot of other products like concentrate or coal or iron ore, it's on a schedule where it takes sometimes 3 months before you get the full payment. So I think we would only go into another commodity if we saw a real opportunity to pick up a very advanced, well-built project that probably ran into issues with too much debt that's coming out of bankruptcy. So haven't had time to look. The gold business is our first focus, as well as iron ore. And no, I think we've got enough on our plate right now. Tucano Gold's going to be phenomenal success. Laiva Gold, amazing. Pilar Gold, again, we didn't talk about Pilar, but all three companies have got a long-term exciting potential. But I want to tell you, before you go, Stein, I want to tell you about the guys about Duckhead. Can we talk about Duckhead? Is that okay?
Sure, you can talk about Duckhead, Jeremy.
You were there, Stein. So Duckhead is part of Tucano Gold. It's a funny name, right? Duckhead, like a duck, the head of a duck. That's to the south of our mill. It's 7 kilometres further south than the other mines of Tucano. Here's the thing. It was the highest grading gold mine in the world between 2013 and 2016. The last month that Beetle Resources produced was September of 2016. They mined for 4 weeks and they produced 20,000 ounces at an average grade of 59 grams a tonne. And then they closed it. They walked away. And we think this is something truly special. Truly, truly special. It's the next Red Lake, the next Fosterville, the next super high grade mine. Needs lots of work, but those grades, we think they're open in all directions. And our geology team are very excited about Duckhead. Again, it comes all part of this same valuation of only 40 odd million Canadian dollars for the whole business. So Duckhead's the sort of business that if we do prove just how good it is, you suddenly can be a $2 to $3 billion stock.
That's definitely exciting upside, and perhaps in the future we can do a deeper dive into Tucano Gold, the opportunity that's there, what is currently baked into the valuation, that MPV calculation, and what isn't. And definitely a very interesting value proposition. Jeremy, I would love to thank you for your time. Really appreciate it, talking first principles, gold, value investing, contrarian investing, and also an outlook for 2024. Is there anything else you would like to share with the viewers at home? Is there anything you want to plug before we head off?
I think, Stein, there's one thing I would note. Having worked in Canada now for a long time, is the importance of having a company's share structure extremely tight. We didn't go on about that, but in Australia, many gold producers end up issuing 1 billion shares. 1 billion shares out, 2 billion shares. The key to a $20 stock, remember, we're doing an 80-cent round for Tucano. We're doing an 80-cent round for Laiva. The key to getting to a $20 stock is having a share count of less than 60 or 70 million shares out. Now that sounds a bit weird, like why would that matter? That is so important, to not have millions and billions of shares all out there selling in your face every day. So we're very proud with Tucano and Laiva that we have built these two businesses with a very, very tight share structure, with mines that are fully built, with no debt, with no hedging, that are ready to turn on and take advantage of what we think will be the greatest bull market in gold of our generation. And we haven't seen anything yet. So Lars, Stein, I just thank you very, very much. You guys have been amazing. You've been to all three of our businesses. You've been in Brazil. You've been traveling in Finland. I think you spent 4 weeks on the road with us, haven't you? And that means a great deal to me, and I just love your channel, and I think you guys are doing great stuff. So thank you very much.
Thank you, Jeremy, and thank you for the viewers at home for watching. Hope you guys learned something, and see you guys next time.